What's up guys, welcome back to Montreal. Recently I got a lot of questions about what I trade, my trading strategy. So I thought I would do a whole video, and this is going to be kind of the bulletproof, foolproof, edit-proof, simple, easy video on what I trade. Hopefully that will answer all the questions. If you want to get also the same kind of signals I get from myself, for not having to spend all your days in front of a chart, we created a product for that recently called the Trading Assistant. That's going to be linked below. But no matter what, if you decide not to get that, and if you decide not to take any training from me, I'll still give you all the stuff that I trade. So with that being said, let's get on the chart. So guys, I thought I would kind of show you first the whole methodology, the whole thing behind what I trade. If you understand only the setup, you'll miss most of it. And that's going to be bad, like really bad. So first we'll kind of understand what's the basic of what I trade, how does it work, when, especially important, when does it work. So in anything I've ever traded, there's basically kind of a process, a step-by-step thing that I follow all the time. And it goes like this. First of all, I look at what we call the market phase. I've done a few videos also in the past that are going to be linked below on that topic. Market phase, we understand kind of the basic structure around what's happening in the market. Then we go to something called support and resistance areas. So the market phase helps us determine that, support and resistance areas. And this is going to give us some areas in the market we can trade. I'll show you again how to do this. There's going to be videos linked below on that topic as well. There's like a bunch of them that I did so far. So that's it for this part. Next, I want to look at some price action. Because we say price action is important. Some people say price action is king. It's kind of important, but it's not the whole picture also. Understand it's like in a framework. Okay, so I'll look at some specific things here. We go from general to really specific, and I'll go back on that process after that. Then from here, I like to have something which you call Confluence, right? We want to add some things. That is Confluence, but I push it a step further by saying I want to look at indicators, okay? So we'll do this as ID, indicators. That's the last thing I look for. So combining these four parts, right? And this would be entering a trade, because this is your trade here. But combining these four parts, it's what you call adding confluence over time and over time. And the more you feel these ones, so let's say you have someone here, something there, and here, then just start this is a pretty good trade. We call this confluence, and sorry for the absolutely bad drawing, but you can also call this edge, right? So that is pretty much for me the same principle. Or you could like argue, or it's not the same thing, it's different. For the sake of simplicity, we'll keep it exactly the same. Edge equal confluence. Now, next step. So you could fill this with whatever you want in the market. Okay, that could be called Fibonacci if you want. It's a support and resistance area type of filter. I don't look at Fibonacci. Okay, so we'll forget this one over here. No Fibonacci. And then this one here could be whatever you think about. Could be patterns in the chart, like these. I don't know what you want to do, like this head and shoulders pattern that looks like this. That could be this. Okay, that could be price action. Any pattern, Elliott wave might work also. I kind of look more at candlesticks, okay? So candlestick pattern for me are the basic thing over here. I personally favor one candlestick pattern that I've seen work more in the past. And it's kind of when a candlestick closes beyond the high or the low of a previous candlestick. So a big candlestick here going beyond the high of the previous candlestick. Okay, so that's for me really reliable. Now, what do we mean by indicators? Well, any indicator you want, RSI, you could go with MACD, with moving averages. I personally don't look at the RSI. I don't really like that. I personally go for Bollinger Band, okay? And that's just my choice. So you decide here what you look for. And then support resistance areas. Well, for me, I look at the plain ones. So a resistance and a support area, like the horizontal ones. Simple. In the market phase is the overall picture, which I'll show you a little bit after. Now this combined, I just want you guys kind of get a whole idea, like this whole thing here. This is what we look for. Like we don't look only at this one here. We don't look only at this one here. We don't look only at this one here, which like some coaches try to sell, like, oh, only this, like focus on this. Like they zoom in on this and they say, oh, look at price action. Price action, like look, it's really important. It's big, major, look at that. But I like to see this overall framework, this overall picture of things. I've seen that when you combine things like this, you get usually better results, okay? Now, once we understand this principle, I want to bring up a chart, and we'll go to some example of trades, like we always do. So we'll do Euro USD, because I think it's a pair most people look at. And the point is not the pair here, it's not about that, it's more about kind of what you look at. And I want to go through kind of the overall principle framework of what I would be doing usually in the market. I prefer to show you guys the process as opposed to the end results, because like people here show trades online, it's ridiculous. So let's go with the process. So we are on USD weekly chart. What I like to see is I like to pick this, and we can even go higher if you want. It's a little bit extreme at this point. And just to make this very clear, I very rarely look at monthly charts unless I really have to. In this case, I'm taking the extreme example to show you guys everything I could possibly show you, and kind of so you get the whole framework and the whole process behind that. But in general, just go with the weekly chart. In my opinion, that will be totally fine. But let's say we start over here. And then I say, well, okay, so we have the monthly chart, which is crazy high. What is price doing here? And I'll like basic error is you put some line on the chart. Oh, so this is a point. Here's a major point, line over here, line over there. And then you just end up with a bunch of line, which is not what we want to have. So here's how you do things. From here, what you might want to do is you might want to add something to your chart, which is called the pivot high-low. Just to give you an idea of like what price does. This is on TradingView. You go into indicators, and you look for pivot high-low if you really want to have that. Okay, you don't need it, but it could be useful. And that's going to give you some kind of marks to help you identify the levels. And then you'll say, well, what is price doing now? You'll take your pen on TradingView, and you'll try to draw some boxes. Okay, so over here, we are going sideways. We'll make kind of a triangle like this. Okay, and that's what's happening. Now over here, we'll break down, and then we make a smaller consolidation over here. And then what happens after, we'll break above, and we'll make an uptrend, kind of a move. And then what happens, we come back here to retest this level. Okay, basically, overall, the whole picture, that's what we see. That's very simplistic, but that's what we see. Now, I would do this the same thing on the weekly chart. I would probably start there, because this is like really big. And then let's just remove all that, because it's going to be pretty much the same. And we'll do it again. So what is price doing over here? USD on a weekly chart. Let's just start from a little bit back in time. Okay, so what is price doing over here? Take the pen, we say, well, from here, we see price kind of consolidating a little bit. And then it's breaking above, it's doing an uptrend, it's going back to retest, and it's breaking down. Okay, so this is what we call the market phase. So here we have a sideways phase. Here we have an uptrend. Okay, come back. So from here it's a kind of a downtrend because we consolidate a little bit, see? Then downtrend. And then we come back up. So we don't even do kind of a consolidation that much. We just come back up. Here for us it's still like a place where we might sell, because this is still the downtrend we saw before. But then here price consolidates a little bit. You always see this before change of a trend. Price consolidates a little bit. And then you have this push. Okay, so break above here. We see now uptrend coming back here to retest the level. Okay, coming back up. Consolidation over here. So market phase here sideways. This is an uptrend. Okay, this is a downtrend. And then we kind of come back down over here. We'll just call this a downtrend. Okay, for purpose sake. So downtrend. And then we just do it like this over time. Okay, what happens next? Well, here we kind of consolidate a little bit. So I'll take the pen, I'll say, well, here we had a downtrend, now it's over. Okay, we kind of did a break here, false break, came back down. And then here we kind of have a small uptrend, okay, which we move upward. So this is up. And then we break here the low, downtrend for some time. And then we consolidate over here. Okay. Now I just do this for the sake of the example, and also because of the fact that I really believe it's good to do it in the past to understand what happens now. Like if you just start and look at the chart now, it's difficult to know what price is doing. But if you take this whole picture before you do it yourself, then it's much easier to look at what price does now. Okay, so we see here we're still in the range until we break above over here. There, okay. Now we'll move forward a little bit. And what we see is that price broke, like consolidate a little bit here at the top of the range. This is sideways. And then break above, consolidation a little bit. Didn't last too long because we kind of fall again. Okay, this is like a very big picture view, of course. Okay, so downtrend over here. And then we consolidate like this. And now where are we? In a consolidation. magical, right? We see it right there. So sideways market, sideways. So now this gives us kind of a clue on what to do, okay? And the market phase says basically two things. So in a trend, you would trade with the trend, okay, whether it's going to be upward, downward. In a sideways market, you would trade at the low and the top of the range. Does that make sense? So you look for bullish trade over here, and you look for bearish trade over here. Of course, you could look for like breakouts if you want and stuff. If you trade breakout, I personally don't trade breakouts. But if you trade breakout, you look for breakouts. So instead of selling here at the top, you would wait for price to go beyond, and then you will buy. Okay, that could be it. That could be an option. But I won't show you this today. This is outside the scope of what I trade. So let's just go with now. Okay, we know we have to buy at the support, sell the resistance, depending on what we are in. And here we see we are in a sideways market. So what we'll do from this is, yes, you could trade on a weekly chart. It's going to be hard. It's going to be painful. It's going to be long. Or you could look on lower time frame. Keep in mind we are traders, not investors. Trading here will be very, very long term. Okay? So I will take this. I will keep this view in mind. And I will say, well, now I can look on a lower time frame. I will go, for example, here. This is a daily chart. And I might trade this chart. Daily chart. That could be a possibility. Okay? Or I might go lower. Let's say the forward chart. And I will say, well, okay, I could trade this area here when we're back at the support. Now, we need to identify the support. So let me just go back over here to make it very simple. I see that 1.16 is a support area. So I'll take a line and a line over here. I'll put this at 1.16. You just put it a round number. Boom. So 1.16 we have a support area which we might want to trade. Now we also have kind of, this is kind of an area, of course, it's kind of wider. And we could go all the way to 1.14 pretty much. So we'll take another line. Now from there, this is like a very, very simple view of what we can look at. And we didn't take much time to look at this. Alright, this has been pretty simple. I like to put a box to signify the zone. Now once we have that, okay, we have our box, we have our zone that we want to trade. Now we could also look for selling opportunities at the top of this range, but let's just keep in mind that we are at the support. We'll focus on that for now. Now within that area, okay, whenever price comes back here, we can look for bullish sit-ups. And the way I will do this is I will bring my second tool. We'll go back over here, and now we've done market phase, we've done support resistance areas. Now we are back at price action, and then indicators after. So let's just go back over here, and now we need to look for candlestick patterns, mostly engulfing candles. We had one over here, we had one over here, we had one over there, and those are all in the support area, keep in mind, okay? And we kind of also had, yeah, we had one over here also, okay? Those are good signs of bullish price action. So we'll go to the next step, which means we're gonna bring indicators. And I'll take the Bollinger Band, which I have on my chart right now. And what I look for over here is basically the zone, which you have over here, the engulfing candle, which you have there, and the Bollinger Band. So I look for Bollinger Band breaks. That's a sign of extreme points. Like we have over here, like we have over here, and over here. Okay, not this and not this. Those are kind of in the middle. Now, there was a trade over here. This is a losing trade, but I'll still show you the principle of the process. And keep in mind, if you are expecting good trades all the time, or winning trades all the time, forget that. This is not going to work. And nothing in trading is going to work. But if you want to treat it as business and know that you will have expenses, then that's fine. We'll just move forward. Okay? So what happens here? When price gets to the level, we say 1.16 to 1.14. That's the support area. Price made this engulfing candle, breaking outside the Bollinger Band with bull candlestick. Only the high or the low can break, it's fine. Here they close outside. But if only the high or the low were to be outside, that's fine too, no problem. And then I will basically see this when enter above the high, this over here. You enter on the next candlestick. And I like to have my trade triggered on the next candlestick. If not, I will cancel the order. I don't want to wait for it to be triggered. It has to be on the next candlestick. And then I will put my stop loss below the low over here. Give it a little bit of room, of course, for the spread. And I have this special way, which is very normal, of taking profit. I put two take profit, one at 1-to-1 of what to risk, just to kind of break even easily. So you would, in this case, take your tool. Here you go long position. We enter above the high of this one. About 5 pips above the high, doesn't really matter. Stop loss below the low, like this. And then reward to risk of, we'll do 1 to 1 first. So 1 over here. And then we'll do 1 at 3 to 1. And that is how the trades turn out. Now, I really want to stress out the point that you should not be attached to a single trade. If you expect to win from this strategy from day one, bad idea. Okay, but I'm showing you the process, the step-by-step stuff, so you can at least implement it. In this case, price went up, didn't reach a take profit, came back down, not in loss yet, you just stay patient, and then hit the stop loss over here. So you were stopped out a few days later. Now this is a daily chart. You could have traded this on lower time frame too, right? Keep in mind. We'll just take a look with that at the lower time frame. We had a lot of opportunities to trade. Just take, for example, if we were to go over there and look for all this engulfing candle. Okay, we had a possibility, I believe, over here. We had one over there, which depending on your rule you could take. Okay, that would have been a good trade-off, of course, like a long way to go. I prefer to have both candlestick breaking outside the Bollinger Band. It's still reliable if you have only one, from what I've tested. But here's how this would have turned out, for example. Okay, so I would have entered above the high of this candlestick. If it's not triggered on the next one, I would cancel the order. Here's trigger, of course. Stop loss below the low. And I would put a reward to risk of 1 to 1. So I'll take my tool. 1 to 1 would have been over there. So you exit half the trade at 1 to 1. And you exit the other half at 3 to 1. Still a good trade. And this kind of profit will make up completely the losses you have. This particular strategy has about a win rate of 40%. But because you get 2 to 1 of reward to risk on average on your winning trades, and the losses get erased by the profit, and that's how you build a trading account over time. And the same principle applies, as you've seen. Break of the Bollinger Band, we had first of all the market phase, support and resistance areas, price action, indicators, which you could use whichever you want. Same with price action, use whatever you want. And then we have a good trade. And that's what we've seen over here on the chart. Well, that makes sense, guys. And this is what you could trade pretty much every week if you want. There's about 2 to 5 setups per week in my experience. First, of course, test this out if you really want to use it. Make sure you understand the stats. Make sure that you feel confident with the stats. Confident in how you can use it. I hope I've touched on all the points, all the questions I got. But if you have any more, comment below, of course. Give a like if you enjoyed this video today. And subscribe if it's not done yet. Also click the bell next to the subscribe button if you want to be notified of future video, because you never ever want to be the guy missing out on all the content, all the videos I produce. That's not cool at all. And with that being said, I'll catch you back here tomorrow. Ciao.